think this is going to be a good year for Bitcoin. We started out the year with the ETF approval, and that was a big milestone. I think that the success of the ETFs is another milestone. I think that the halving in April will be a third positive milestone. I think those three things are going to drive momentum, and I think all the marketing wars between the Wall Street firms is going to be positive, and I think the assets being normalized throughout the mainstream investment community, and so I think it'll just keep generating momentum from here.
In the dynamic world of cryptocurrency, Michael Saylor, the visionary founder and executive chairman of MicroStrategy, is making headlines with his bold predictions for Bitcoin in 2024. Saylor, a well-known businessman and ardent supporter of Bitcoin, thinks that the forthcoming halving event in the fourth month of the year will mark a significant turning point for the top cryptocurrency. Saylor notes that the 2024 incident is distinct from other halvings, since the U.S. Securities and Exchange Commission approved multiple spot Bitcoin ETFs in January. Due to this development, institutional investors in the U.S. are aggressively purchasing Bitcoin through these ETFs or intend to do so in the near future. As a result, the already limited supply of Bitcoin is expected to be further reduced by half during the halving, creating an unprecedented supply-demand imbalance. In his recent interview with Crypto Nutshell, Saylor shares his outlook for Bitcoin in 2024 and beyond, discussing the potential pathways for Bitcoin post-halving. According to him, there is a brief window of opportunity to acquire Bitcoin at its current value before a projected surge that could make it unaffordable for many. Keep checking back as we share with you the most important takeaways from this conversation, giving you an idea of Michael Saylor's thoughts on the direction that Bitcoin is taking and the revolutionary effects of the halving event.
I'm not surprised they're successful. I expected them to be very successful. I think there's 10 years of pent-up demand. They're the most eagerly anticipated development in Wall Street. This is like Bitcoin coming public. It's like the IPO of Bitcoin, except it's like 10 companies simultaneously taking Bitcoin public, because Bitcoin's a commodity. It's not a security. So the idea that BlackRock and Fidelity and Grayscale and Bitwise and ARK, they're all taking Bitcoin public at the same time is a big deal. The fact that I'm not surprised they're successful as ETFs, because Bitcoin's the apex ETF. The other ETFs are based on oil, like let's say commodity ones, oil, gold, platinum, silver, palladium, market baskets of commodities, natural gas. All of these things are defective as investment assets because physical commodities aren't scarce. Physical commodities can be manufactured in any amount with additional capital and know-how. So ultimately, the best of them is the gold ETF. But if a bunch of money flows into a commodity ETF, that just actually fuels capital into commodity producers. They just dump that commodity on the market, the price gets held down. So commodity ETFs were never that great an idea. On the other hand, comparing these Bitcoin ETFs to the S&P index, the biggest ETF and maybe the biggest development on Wall Street was the launch of the SPDR, SPY, in 1993, about 30 years ago. And the idea that you could create an ETF that represented a market basket of 500 stocks, that was big. And especially that was big because that came along at a point where people had lost faith in the currency as money, as a savings technology, but the S&P. So the S&P became money, and that ETF became the monetary index. And that's why today, amongst, that's the most successful ETF. If you look at SPY and all the S&P index type ETFs, they have most of the capital in them. But the problem with those ETFs is that stocks also are not conservative. So if I increase the price of the stock by a factor of 10, you're getting more equity. Or if another way to say it is, if I take hundreds of billions of dollars of cash and I buy the ETF, like S&P ETF, the ETF has to buy all 500 stocks pro rata, which means they're going to have to go buy Tesla and Apple and Google and Meta at any price. They're price insensitive, even if they're overpaying. So when they buy it at any price, what they're doing is they're creating more equity because they're encouraging those companies to issue more stock. And then, of course, this is common sense. If the price of your stock doubles, the employees in the company with stock options, they sell the stock, right? They sell the stock option. When they sell the stock option, you put more stock on the market. So the price creates supply. There's a price supply elasticity there. And that's the same as you have with commodities. It's the same as you have with REITs, real estate investment trusts. And it's the same thing with bond funds. When you have capital flows into all those other asset classes, you create supply of that asset. They're not scarce. Bitcoin's unique because no amount of capital flowing into a Bitcoin ETF is going to create any more Bitcoin. What we've got is 900 Bitcoin a day. And around April 16th to April 18th of this year, we're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving in the history of Bitcoin.
According to BlackRock's most recent data, as of February 23, 2024, the largest asset management globally had accumulated an astounding 130,000 Bitcoin for its iShares Bitcoin Trust, IBIT. Back on February 14th, IBIT held around 10,196.9 Bitcoin, marking a significant increase to at least 130,000 Bitcoin within a span of just 9 days, now valued at $231.5064 billion. Notable is the acquisition's acceleration, as BlackRock doesn't appear to be slowing down. According to statistics from BitMEX Research, on February 23rd, BlackRock and other spot Bitcoin ETFs received a total of nearly $232 million in net inflows, with IBIT coming in front with $1,167.5 million. Fidelity and ARK Invest followed with $52.5 million and $34.5 million, respectively. Interestingly, Grayscale's GBTC witnessed minimal outflows, losing only $44.2 million on that Friday. Surprisingly, all 10 U.S. spot Bitcoin ETFs have now had net inflows of over $5.5 billion, even while GBTC has seen withdrawals of $7.4 billion. This information supports Michael Saylor's position that there is a persistent and exceptional demand for Bitcoin, which he expanded on in a recent interview. The way he discusses his predictions for Bitcoin in 2024 and the years that afterwards, which end in 2034, makes it clear that institutional investment dynamics are a major factor influencing the direction of the cryptocurrency market. Let's listen to his following words.
I think this is going to be a good year for Bitcoin. We started out the year with the ETF approval, and that was a big milestone. I think that the success of the ETFs is another milestone. I think that the halving in April will be a third positive milestone. I think those three things are going to drive momentum, and I think all the marketing wars between the Wall Street firms is going to be positive, and I think the assets being normalized throughout the mainstream investment community, and so I think it'll just keep generating momentum from here. I think it's also worthwhile, I think, to make one point. I think that we're living through the Bitcoin gold rush era. And I think the Bitcoin gold rush era started January 2024. And I think it runs until around November 2034. So it's about 10 years. And I'll tell you why. Because 93.5% or so of the Bitcoin was mined at the beginning of this period. But in November of 2034, 99% of all the Bitcoin that will ever be issued will have been issued. And so that halving is very symbolic. People talk about Bitcoin, issuance coming out over the next 100 years, all the way till 2140. But the truth of the matter is, the last 100 years, you're only getting 1%. So think, and actually, of that 1%, 90 basis points of it is coming in the 12 years that follow 2034, and then it's 10 basis points, 0.1%. But practically speaking, all of the block rewards are de minimis starting in 2034. It's 1% over 100 years may as well be nothing, because the daily volatility and the daily trading volume is going to render that to be somewhere between third order, fourth order, fifth order of magnitude. So that being the case, really, this 10 years is your best chance to get Bitcoin, right? This is the gold rush, because this is the period where there's still a lot of FUD. There's still a lot of uncertainty. People still aren't sure. They don't understand digital energy. They don't understand digital capital. They don't understand digital property. There's a lot of debate in the community. Is Bitcoin a currency, or is it a property? Or, there's massive debate. And a lot of people say, well, it's a currency, and since it's not legal tender, or because it doesn't move fast enough, or I can't buy coffee with it, it's not a good currency. So there's a lot of confusion in the crypto community. There's a lot of mainstream regulators. They think it's currency. So you see bankers say, oh, it's a currency, but it's not a good currency because I can't buy coffee with it. I can't buy things online with it. And it's too volatile. And they think that's a criticism. And so they criticize it. And then people that think that they know what they're talking about, they hear some famous person say, well, Bitcoin is not a good currency, and or the government will ban it, or it's not as good as the dollar or something. And so they get afraid and they say, well, then I trust that guy, so I'm not going to buy it. So a lot of people are criticizing it for the wrong reason. A lot of people misunderstand it, and that creates lots of chaos, misinformation, stupid, misleading stories in mainstream media. It creates like bad takes on Twitter. It creates all sorts of confusion amongst Wall Street analysts. And so all of that fear, uncertainty, and doubt, and just basic confusion, and then misunderstanding, that causes a slow growth in demand, right? Like, demand is growing, but imagine how much faster it would be growing if everybody had spent 100 hours, right?
Michael Saylor provides a thorough analysis of where Bitcoin will go in 2024 and beyond. He cites 3 significant turning events in the market's history: the acceptance and prosperity of Bitcoin ETFs, as well as the impending April halving event. As for the future, Saylor presents the idea of the Bitcoin gold rush era, which he believes will begin in January 2024 and end in or around November 2034. This timeline corresponds with the issuance of about 99% of all Bitcoins by November 2034, which means that the current decade is a great chance to acquire Bitcoins because of the declining issuance. Saylor acknowledges persistent challenges such as fear, uncertainty, and doubt, FUD, surrounding Bitcoin. He attributes this to widespread misunderstandings about its nature, functionality, and classification as a currency or property. Despite these hurdles, Saylor sees the present as an opportune moment for Bitcoin investment, highlighting the existing confusion as a factor slowing demand growth. He emphasizes the potential for accelerated growth with a clearer understanding of Bitcoin's capabilities. Michael Saylor's observations, which highlight the exceptional buying opportunity during the present Bitcoin gold rush era, essentially offer a thorough knowledge of the mechanics of Bitcoin today. Don't forget to subscribe for more videos like this. Until next time, happy investing.